Hope you guys are doing well. Today's bank holiday, so not a whole lot of movement, and we have a premature closure. So, wasn't going to trade or stream today, but instead, we're gonna have the first kind of not lecture, but I guess kind of video on the model that I'm planning on focusing a little bit more on, and hopefully you guys can find some value out of it. A couple different ones, both kind of follow the same sort of analysis, and then use specific elements of time to get in. So the first thing I wanted to cover was market maker models. So if you haven't seen the backtesting video that was from Saturday, it's called the macro cheat code. This one right here. This is kind of the first section. It's priming for this lecture, but we'll build on that, and then we'll go into the actual model later in the week. But first thing is we have to understand the MMXMs at a deep level. It doesn't even have to be a super deep understanding, but we need to understand how they function and what we're going to use each day to find a trade. Because if everything is a market maker model, that means that all the trades that we take that are going to be high probability need to be framed on a MMXM. And most times they're going to be framed on something that's higher time frame, and has time associated with it too. So if we're looking to trade something like the silver bullet, then we're going to be looking at maybe a hourly or 15-minute draw as your higher time frame. And then time, obviously, would be 10 to 11. And you're going to be using some sort of PD array to enter. So that's kind of the first section, right? Second section is, okay, where are we in the MMXM? We could be at the original consolidation. There's about like 6 different areas. I'd say original consolidation, first stage accumulation, second stage accumulation, the SMR, first stage distribution, and second stage distribution. Now, I'm sure you guys are familiar with all this stuff, but identifying where we are in the MMXM relative to wherever price is opening at a specific time, it becomes much easier to anticipate the draw on liquidity as we reach down there. And obviously, we're going to be using our higher time frame draw on liquidity is either going to be a fair value gap or liquidity pool. And those are the only two we're ever going to be targeting, right? Inefficiency or liquidity. So to give an example of this is maybe we see this original consolidation, the first stage, the second stage, and then maybe right here is 10 a.m. Well, okay, you can see we've already formed a breaker, had this one running reversal. We have this original consolidation as a sell side draw. So identifying where we are on the MMXM, it becomes a little bit easier to anticipate, okay, this is the draw on liquidity. And if we short this, then we can be taking partials, obviously, below anything in discount. Same thing with the flip side. If it's a market maker buy model, I need partial within premium. Now, the easiest section in price to be trading, just like I said in the video on Saturday, is going to be this section in price here. The second stage of distribution in a MMXM, or your second stage accumulation in a market maker buy model, I guess. But anyways, it's still second stage distribution right before your liquidity or your imbalance is met. Okay, so using elements of time, we can predict basically when this stage is going to happen, either on a higher time frame or a lower time frame, and then get in with order flow and target liquidity. And it's so much easier than people make it seem, and myself included, and probably yourself, is we're complicating things by trying to add everything into it when this is literally all the framework you need for every single time-based trade model that you basically will ever study. It's always framed on this, and most times we're going to be looking at the trade this section in price instead of trying to capture this section and this section, maybe right at the smart money reversal. But some tips to identify when is this going to happen. Well, first of all, we need to be in line with time. So there's going to be a section in time every single day that this second stage of distribution is going to happen. So first we got to understand that. Second, we have to understand, are we targeting a higher time frame pool? And on that higher time frame or on the lower time, is it going to be internal range or external range liquidity? So your internal range liquidity obviously is going to be something like all of these swing highs where if we're within a MMXM, internal range is going to be all the swing lows before the long-term swing low. Same thing with this. This is internal range. This is internal range. Then this is external range. So if we're looking to target an external range liquidity or imbalance, what do we need to see before that ERL is hit? Well, first we need to see an IRL sweep. Then ERL. Same thing with if we're anticipating an internal range sweep as our target, then we need to see ERL. So if we see an ERL sweep, then IRL. We also have to understand that this IRL to ERL and vice versa will happen on different time frames. So this can be multi-time frame. And I'll go more into depth about this in later videos, but if just kind of as a summary, obviously if we are sweeping liquidity like this, we could either reach up into this internal range and then that'll be your external range to internal range, or we could just be retracing like this and then dip lower. But on lower time frames, we'll see maybe a tiny portion of consolidation here and then prices sweeping that. If you've seen price fractally, you know exactly what I'm talking about, but this is the framework we're really going to use. So we're going to ask ourselves, okay, where's the higher time frame draw? This is the checklist we're going to go through every single time we want to frame a trade setup based on whatever the model is. So higher time frame draw, it's either going to be a liquidity point or imbalance. We're going to look at, okay, where's the MMXM and where's the second stage of distribution going to happen? And on what time frame. We're going to be looking at the order flow to confirm our bias. We're going to be using the ERL to IRL and IRL to ERL basis to also frame our trade. And then obviously we're going to be using time and PD arrays to enter. It probably seems like a lot, but once you understand this in a deep manner, it's so rinse and repeat. It's you show up to the chart every single day, and you find exactly what you need. Get in, be done, and it's a one shot, one kill. And it's so, when you study it and you see it happen over and over and over again, and you know that for a fact it's going to happen tomorrow, next week, next month. If you miss the trade or if you don't show up a day, it doesn't matter because you know for a fact that this framework is going to be there. Now, what are the times that we see second stage of distribution on a market maker model? Well, Flux, we've talked about this entire thing, but how do we time this? That's the most important part, right? Well, we know that there's also specific times that can start the smart money reversal, right? So we can kind of work backwards. What are the times that we've been studying recently that the smart money reversal can happen in the AM session? Well, there's about 3. It would be your 8:30, your 9:30, and your 10 a.m.s. Right? That's where the smart money reversal can happen. So then what are we looking for as a second stage? Well, realistically, any time after these original times is going to be that second stage. So what we can look at is if 8:30 creates a smart money reversal, then we can be looking at any time after that. So 9:30 or maybe the 9:50 macro or even silver bullet to create the second stage. 9:30 creates the second or the smart money reversal. Then we can have 9:50. Obviously, any macro time or important section in time after that, maybe 10:50, will create the second stage, 10 a.m. sweep. Obviously, you get the point. Silver bullet, 1050. And all those times after, right? So if this creates the smart money reversal, all those times after will create the second stage. But think about think about this kind of fractally. If all of these times, or all of these times, either one, the smart money reversal or the second stage, finishes the MMXM, right? So if we're looking at the MMXM, and this is the section in price where we start looking, and it finishes that MMXM. Okay, so reversal consolidation, first stage, second stage, smart money. When we're approaching that second stage, and we want to see a breach in the sell side. That's your external range liquidity met. And it's going to start a second market maker model. That finishing leg is then going to start a second model. So maybe 830 create that sweep, and we want Silver Bullet to finish this one. If Silver Bullet and we're anticipating an external range liquidity purge, we can be trading that external range liquidity, or we can be trading after that external range liquidity is met, we trade the next market maker model back up to internal range. So it could sweep this. Then we know, okay, we're waiting for a lower time frame MMXM, or actually an MMBM, a buy model, right? And then we just wait for the next kind of kill zone. So that could be a macro, that could be another volatility driver that comes into the marketplace. And then we can use that, obviously, to target internal range or any lower time frame gap that's formed in there. But funny thing about this is all of these times, every single one is a section in price where the second stage is already happening. So 830, 930, Silver Bullet, 950, 1050, even 1150 macro. All of these times that ICT has given you are important because they finish a MMXM and complete a new one. Okay. You kind of have to just see this to fully understand. I gave examples in the Saturday video about what this looks like on the lower time frame. Like, there's always going to be different times that these MMXMs are going to be completing. So like on a macro, we may be looking at a 1 minute or a 5 minute DOL for that MMXM to complete. Silver Bullet, it could be as large as an hourly or 4 hour. It could also be just 15 minute or 5 minute strong liquidity. The equity opens or the 830 news, it could be an hourly, 15 minute or 5 minute. So you have to identify where the drawn liquidity is and what time frame it is, and then you go through this checklist again. All right, what's the higher time frame drawn liquidity? It's either a DOL or it's either a liquidity pool or fair value gap. Then you go, okay, are we in the second stage? Is it obvious to me? No. Okay, we'll wait for the next time. If it is, then we can look for PD raise to enter. Is the order flow confirming my bias? Have we been holding bullish PD raise? Have we already seen the first stage? So if we're anticipating the second stage, we need to see the SMR and the first stage already kind of play out, right? And are we anticipating an ERL run? Have we seen the IRL liquidity sweep? Obviously vice versa. And then we'll be using our liquidity pools and time to enter. So we'll go into the charts and we'll show you a macro example. But the main focus of the model that will be focused, the main focus on the model, what to focus on is we're going to be looking at more of the 930 liquidity sweep and how to trade that. And I have already recorded about 6 to 7 different videos, kind of showing in depth how to trade it. The macros work the same exact way, and once you understand one, you can apply it to any of the different ones. One thing I never understood was why ICT wants to enter on the second stage. Can you explain? The second stage of the MMXM has the least amount of liquidity, has least amount of resistance towards the drawn liquidity. So yeah, it's the quickest run. Exactly. So if we're looking at something like the first stage, sometimes this first stage, oh yeah, no problem. I'll see you soon. This first stage, a lot of times will have a internal range liquidity run. So on the lower time frame, it's going to look something like this, a purge, and then it continues down, right? And you've seen that sometimes with the 830 profiles that we've been trading recently. So, or we could have a deep retracement sometimes up to the a gap or something like that. So you want to be trading this one because this is the quickest run and the least amount of resistance before that sell side is hit. So when we're looking at this first stage, once we come to the charts and we're looking at that second stage, we can be identifying this first stage. Did the first stage, if we're looking for external range, purge a form of internal range liquidity? So if we saw something like this in a purge and then we are seeing the second stage now happen, we can be so confident that this high is not going to be taken. And we can be confident that the PD rays below it are going to hold, and we can get in right in here and target that sell side. So I guess the easiest definition is just the quickest run. There's also going to be kind of two forms of the second stage. It's either going to be your standard, the one that you always see, right? Like this one, right in there, or it's going to be a deep retracement, where sometimes we have that smart money reversal happen. The first stage is near it, or the low risk entry. Technically, there's three. It's going to be low risk, first stage, second stage, but sometimes the low risk entry is only your CISD, which is hard to spot on lower time frames. But anyways, sometimes we can have something like this. If there's a large gap up here in this way of the displacement leg, we can see a large retracement going into the second stage and then the dip lower. So once you identify and get used to trading these two profiles, these are the only two profiles you'll ever see. So let's go into the charts here. And we'll go back to a different macro. Even in here, I mean, we'll look at this one later, but do you now see how this macro in here creates the second stage? Fractal MMXM, smart money reversal, purging the buy side. First stage within this, it's a tiny one, right? Then displaces. We use time as our entry. Get in, target that sell side, target that sell side. Runs lower. But we can be using the macros. Here's the other one we went on stream and talked about. Okay, where is our SMR? What's our kind of visual cue of SMR? Well, it's going to be those larger wicks and the candle bodies closing above the buy side or sell side. So this would be our smart money reversal. Starts trading up, deep retracement, but we're still holding this smart money reversal point, right? We never take it out. Trade up, displacement. So we've already seen the SMR first stage. We're anticipating second stage now with this 1050 to 1110 macro. So what do we use? This is where now we come to the charts and look for the PD rays. We don't care about any of this stuff. We don't care about price. You can turn off the chart until you identify this first, your time. And then once you come to the chart and look at based on the time model, then you look at the PD rays that are supposed to hold. Then you look at where do you need to place or stop, because 3 PD rays are supposed to hold after that. Then we look at the order flow. It's not price first. You're not going to be sitting at this chart for 4 hours trying to mark out every single order block and PD array and trying to frame a trade on the 1 minute, because you don't understand that on a higher time frame, if price wants to go somewhere, it's going to go there first, and it doesn't care about lower time frame PD arrays. So we're going to be using a top-down analysis. So you go to the 5 minute. Okay, where's our dealing range? We just took out external range. It's going to be anticipating internal range, right? Where's our internal range liquidity? Well, we have this high as our fractal in price, and we have this low. What's in premium between here and here? Well, we have all these 5 minute gaps in premium. We have any swing high or swing low. If we drop down to a lower time frame, 4 minute, you can refine that even more. 3 minute, Obviously another gap overlaid. Drop down all the way to the 1 minute chart. And we have that stuff marked out. Then we look at the 1 minute. Then we can go, okay, if this is our target up here, or even if this is our target, right? And we want to see a premium PD rate hit. And we know that our macros are going to be second stage of distribution. Doesn't this now make more sense? If you were to come to the chart and just look at this, this is right at 1050. Doesn't this make a whole lot more sense than if you were just trying to trade the 1 minute price action when the macro starts? Then you can look right here at 1050. Okay, have we seen a smart money reversal to the buy side? I don't think so. We just took out external range. Like this you could see as a smart money reversal, but does it make sense with the context we've been given? No, we just took external range out. We're looking for internal range now. We want premium of this dealing range. We have a gap up here. We have a smart money reversal that's been respected and not violated yet. We have a first stage and a liquidity sweep internal. See how I was talking about that internal range liquidity sweep at the first stage? Right there, boom, at 1033, takes it out. So we already know that this low has a very, very high chance of never being touched again until the draw on liquidity is met. So we can put our stop there. But then we come to the chart. We go, okay, 1050 macro. We know it's a second stage of delivery on some sort of MMXM. And we know, okay, if we come to the chart right here at 1050, now we know that price, wherever it is currently, 3 PD rays below it will never be touched. Okay, so we can zoom in. Okay, we have this gap. We have a bullish breaker now. This low, high, lower low. That counts as a PD array. So you can take these last up closing candles. I'm just picking 3. You can pick the entire thing if you want, but I'm just picking the 3. Extend that out. And we have a gap. Tiny gap in here. I don't know if you can see it, but you can have a tiny gap in here. So that's our 3 PD arrays, right? So if price is opening up here around 959, this maybe is the last section in price. Like right below here, you can now reduce your stop by using that analysis to this low, right? We don't want to see this fair value gap filled at all. And we don't want to see a cross below that because then our drawn liquidity is wrong, okay? And now you just go into the macro and be like, all right, any bullish PD array I see that's filled or tapped into, I can just take as an entry model. So we play it. Look at the precision there. Fills it. Do we ever touch even into this gap? No. Play it more. Still fails to touch it. Look how close we get. Now the PD arrays are holding. Now this is where ICT goes, the 3 PD arrays in your ass is next. This is why 17,783. Low on this candle is 17,783.5 and 0.75. So see the precision the algorithm has now of the 3 PD arrays. Obviously, a stop below here I'd be fine with, but if you're really, really aggressive or if you knew what you were doing, you could put your stop right there because we already have 3 PD arrays lined up. Then we just wait. All right, 1050 is coming. What's a bullish PD array we can take? Well, we have a bullish order block or a bullish fair value gap. Preferably, you want to use a fair value gap entry. Trades up. Trades back down. So this trade up here has confirmed now. Obviously, we're trading to this gap, so you could be long anywhere in there. But this trade up has now confirmed this bullish order block, right? And in the process, make this a bisi. In the process, we just dipped lower here. Are we going to be shorting that gap just because it printed? No. We know that as soon as this prints, we can be confident, if our analysis is right, that this will immediately turn into an inversion gap. It's just a displacement. And then we can use that as inversion. So it's this when you see the sibi print and you're so confident in it, you can actually be using this. You can already anticipate this as a bullish PD array. So you can be getting in anywhere in this macro time. Obviously, this gap over here, we can be long in. We can be trading down to this order block and be long in there. We could be waiting for this inversion, be long in there. And even in here, we have another order block that's held. And then macro time plays out and we run up all the way and complete this BM. But even from here, like look at how far this is from this first entry. And obviously this entry is given to 64 points. I don't think anyone's mad about 64 points. And you can do this with every single macro. Like this same exact top-down analysis works with every single macro. And you're not going to believe me because it sounds stupid how easy it is. But this is what it does, right? And sometimes it's going to be different time frames. Just like I said on the earlier part of this lecture, that it's going to be multi-time frame, so it's going to be sometimes harder to identify. Like in this macro here, obviously we have a higher time frame drawn liquidity. Like if I go to this 15-minute chart, here's our drawn liquidity here, right? And we have more down here. On the 15. So on the 1-minute chart, it's going to look difficult to enter. We don't see the MMXM on that chart. But then when we go back to the 15, it says, okay, we're still anticipating a sell side run. 5-minute chart, 3-minute chart, 2-minute chart, 1-minute chart. Goes all the way down. And you can see even right here, as price is dipping into sell side, we still get that second stage where we're completing the higher time frame MMSM. Sibi can be shorting that, and still 50 points down to that sell side. And obviously you could be holding a runner down to here, but you could be taking your low-hanging fruit right in there. Okay, we can go to another one. Let's find another macro. And then once you understand this, it's like tedious and kind of boring how easy it is. But here you can see come to the 950 macro. As soon as 950 hits, okay, where's our smart money reversal? Have we got a sell side run? That's important. Obviously, we have to zoom out here. We have sell side down here and more sell side over here. But I'm just trying to show you on the 1 minute. Where's our smart money reversal? Well, to me, it already pops out that we had 8:30 news. So we're going to be anticipating that to be our SMR. All right, like just earlier in this lecture, I just told you that. So we can be looking for any time after that to be the second stage. Well, 9:30 just had an internal range liquidity sweep here. Now, what's the second stage? Well, anything after this, our first kind of time-based draw, it's going to be 950. 950 comes, we have a, now we look at the PD raise. Okay, what's a fair value that's formal? We don't see anyone in here. We have a bearish fair value gap that we've closed below. Can use that as our entry point. Runs lower. Another final entry is given with the fair value gap and runs lower again. Right, multiple 50-point opportunities almost every single day using that same kind of framework. In here, well, what do we see? I'm seeing internal range liquidity swept. I'm seeing approaching 950. This one's a bit harder to see, so you're going to be waiting. Okay, we just had an internal range liquidity purge. What are we expecting after that? External range. So anything above this high, but you could be using this high as a drawn liquidity. So as soon as 950 hits, you don't know if this is the SMR or if this is the SMR. So we wait. Have we seen the first stage? No. And we're trying to trade the second stage. So, okay, let's just watch what's holding. Well, we have our bullish. This is the same exact example I did on the backtesting stream. So you know exactly what happens. But bullish rejection block. This is kind of your last bullish PD array before the SMR. That holds, trades up, and we fill this gap. So this could be seen as your first stage of MMBM. Then you go in, you wait. All right, we just tapped into another fair value gap. We can be confident that's going to hold. We're not going to take this low out. Long in there, targeting the buy side. Obviously, we ran up after that. Now you can look. We just ran external range. What are we anticipating now? Internal range liquidity. What's the next macro? Here to here. Where's the SMR? Up here. Right? Where's the first stage? Well, you can be just watching price. In here, while we have an order block, obviously all this stuff is now holding. Inversion gaps are being used. And our order flow is bearish. So as soon as we come to here, does it make sense that we trade back up? Have we got our SMR on the downside? No, we haven't even taken liquidity here. Have we got our first stage yet or a low risk entry? No. And this makes it's so much more obvious for a price to run down the sell side because we have already identified the stages before it. And each macro time or each silver bullet time or each equities open or 8:30 is going to be completing the MMXM. So we go into there. All right, we're going to wait for any bearish signature, bearish PD ray to be used. There. Bearish value gap. Dings it and sells off. Then back to premium after the internal range. So after identifying SMR, you would look at 950, 10, 15, 11, 15 macro. Yeah. You could be at any of those times, it's always going to show the same exact fractal price. Even in here. We went from external to internal. Now we're going to wait for external again. Now do you see the entry point? This one's difficult because we don't really see this is a deep retracement on that second leg, and then it comes back down. But would it make sense here for us to be buyers? Well, we have to just watch how the PD rays are held. We've already dipped below this gap, and we've closed below 50% of this one already. So why would it make sense that we're continuing back up? It doesn't. Now, my favorite way to use this kind of methodology and analysis is on the 8:30 and 9:30 liquidity runs. That's a whole kind of guide on itself. And throughout the next week, I'll be posting the videos in the model. There's a new chat in the private group area. It's going to be the model. I'll send the links to the unlisted videos in there. And you'll see how often they play out. I'll actually send one right now to this kind of stream, but using that same analysis, you can go in every single day and look from the hourly, the 15, the 5, and you never have to drop below the 5-minute. You find an entry between 9 o'clock and obviously 9:30, because that's our volatility that we're using to finish MMXM, and you'll see how often it happens. It's almost every single day. Same thing with those macros. Same thing with the silver bullet. If you zoom out and look, here's 10 a.m. We're looking for a fair value gap to be filled between 10 a.m. and 11. Now, if you're looking at the hourly gap, now we're finishing the MMXM, and that's our second stage between 10 and 11. Obviously, it runs down into 3 p.m. It takes the entire day to get out, but we've finished that off. So yeah, it's definitely a lot of stuff you have to consider at the same time. But if you basically not forget, but if you have a model and you're struggling with it, or if you have, it just feels like you're not in line with price, just looking at the 1 minute, or you're just all over, like as soon as that macro hits, you can see the buy side or the sell side run, or you're trying to trade the 9:30 run and it just doesn't make sense. Or maybe you're just stuck on, I don't know what PD array is going to hold and when. How does ICT know that 3 PD arrays are going to hold here and not 20 minutes ago? It's because he's using this kind of analysis that frame his trades. So let me actually send the first video. You'll see what I'm talking about. Or we can just do one live. But all right, all right, so this is the first video. Actually, it's technically the second video, but I have 1, 2, 3, 4, 5, 6, 7, 8, 9. So there's 9 total sections. It's going to be kind of like I don't want to say a course. I don't want to sound like one of those Twitter gurus who sell a course and has nothing to do with anything. I mean, I guess it technically is, but it's all based on the 9:30 model and the 9:50 macro. So if you want to trade like a one shot, one kill on a day, and you just want to look at basically an hour in price, it's going to be focusing on the 9:30 open and how to use the volatility at 9:30 to finish the MMXM and start a new one. And then it's going to be using the 9:50 macro and kind of the analysis that goes along with it. So let me send the first one. It's about 4 minutes long, and it's just me doing 2 examples live. I'll send it into the model. All right, let me know if you can see that. Give me a thumbs up or let me know. I didn't post anything before, so see if now if you have access to it. I think everyone should. Okay, sweet. All right, so I'll leave that to you. Throughout the week, we'll go in and I'll send more videos. That's kind of video 2. The first videos and the videos after will go into depth of how to find your draws and things like that. It's basically a full guide. If you forget the things you know and just look at this and the way that like kind of how the market functions based on the second stage and MMXMs, it's so much easier. So this video, I'll post this recording up on, actually I'll post the link into the model. I'm not going to post this up on YouTube until you guys have seen the entire thing and you guys can give me feedback. But other than that, I'll leave you to watch the video. If you have any questions, you can shoot me a DM. No trading today just because it's a bank holiday. But tomorrow, I'll check price, see how it is, and we'll have a stream as normal. So have a great rest of your day. Hopefully this was insightful in the least. And I'll see you guys soon. Peace.